It's my pleasure to welcome Clinton Donnelly today to Be Wealthy and Smart. How are you doing, Clinton?
I'm really doing well. Very happy to be here. It's a great day to be investing in America.
I love it. And you are uniquely positioned as a crypto tax professional. Tell us about crypto tax audit and your experience with that.
Well, my firm has been doing crypto tax returns starting in 2018, and we have been starting in 2019. We've solely done crypto investors. So all we do are tax returns for crypto investors, and our name pretty much describes what we do. We do three things. One is we do a full service uh, capital gain calculation for investors. So rather than you having to use one of these online sites, you give us the transaction records. We do all the work for you. And we pretty much attract middle to large investors who have high frequency investors, DeFi investors. There's nothing too complex for us. We've had guys that have had tens of millions of transactions in a year, people who had over 100 wallets that they traded on, uh, and exchanges where they've lost the transaction records. We can get it all done. So we are the number one crypto tax analyst in that space. And not only do we do the analyst, but we also go the next step. We actually defend people in audits before the IRS. So we've done over 50 audit defenses at the IRS, and we've taken several of those cases up the tax court where we're challenging the IRS's gain calculation. And we win. We continually destroy the IRS gain calculation numbers because we have in-house forensic accountants that we just analyze their numbers and just find all the errors and push them back on their heels. We have one account where tax court case where the IRS has gone at it 5 times, and 5 times we've proven to them that they've made gross and significant errors in disqualifying their results. So that's the audit defense side. We do the legal representation as well. We also do a tax return preparation. Now, most people look at a tax return from here's my 1099s, my W-2s, just give me my tax return, I want to file it. This is not a good way to look at a tax return because that's basically a bare minimum approach. And that's what you're going to get if you go to an H&R Block, if you're using a TurboTax, do-it-yourself software. And for the most part, 98% of all tax preparers and CPAs, this is what they're going to do for you. We have a different approach. We basically, because all our clients are high target, high risk audit people. And so we look at a tax return as how do I defend this person from an audit? How do I protect them from even getting audited in the first place? Our approach is we put extra things in a tax return that you wished were there if you knew in advance you're going to get audited by the IRS. So we put in anti-money laundering disclosures. We put in the FBAR and the FATCA forms. We put in disclosures on how we handle various situations. We do Ponzi scam reporting. We can do investment loss. People that are, had pig butchering scams, we can help you get a recovery through tax of amounts that you invested in these things. So these are things that most CPAs and tax preparers have no interest in doing. So that's why people come to us. We charge more for it, but we do it well. And the proof is we've done over 4,000 tax returns, and none of them have been audited by the IRS on their crypto gains. So what we do actually does discourage audits. The last thing we do is since early 2020, we've developed technology or worked with some companies and extended that technology where we monitor taxpayers' accounts at the IRS on a weekly basis. We pull their transaction activity, and we can see when the IRS has flagged someone's tax return for an audit. We can see that flag about 2 to 6 months before the actual audit begins. We can also detect when someone has failed to report all their income from 1099s and W-2s, which is the most common cause of an audit. We can detect that months before you actually get a letter from the IRS. That gives us a window of time to fix the tax return before the audit begins. Plus, it avoids the 20 to 40% accuracy penalty that you can get hit with if you don't stop that from happening. So, what is amazing is not only do we monitor it, we have a product out there called Tax Shield. You can go to cryptotaxaudit.com/tax shield, and you'll see Not only do this monitoring service, we give you a monthly status report, kind of like a credit score on 8 different categories of your relationship with the IRS. We also offer a free risk assessment on your past tax returns and, discuss, if there's anything you need to do to get into compliance to feel safe from the IRS. And so many of our investors, crypto investors, because the value of their assets have really skyrocketed, as we have talked before, that they are definitely in the IRS's crosshairs for audits and investigations. So there's no other tool like our tax shield product that gives you the ability to monitor the IRS and to see what they're doing before they do it to you. So that's a very nominal price, $495 a year. And it's just incredible. People have been signing up for that significantly, especially over the last, since the prices have skyrocketed on crypto, it's really gone up.
Yeah.
So that's what we do. We're the best in our industry, honestly. There's nobody in our league. And we have Crypto Tax Fixer is our Twitter account. We have also Crypto Tax Audit on Twitter and YouTube account. Just lots of good stuff out there for people who are curious about the latest in what's going on in crypto taxation.
Yeah, well, no question about it. You are the best. And for anyone that has issues and, needs help, you're the place that I always recommend people go. So Clinton, last year there was talk about the laws changing and people were scrambling. They were going to have to calculate all their gains on their crypto and use a FIFO method of first in, first out. And then we had kind of pushback, and maybe some of the exchanges weren't quite ready to be doing the reporting. What's going on with that, and what's the status there?
So back in 2021, Congress passed the Inflation Reduction Act bill, which included the requirement for the Treasury Department, the IRS, to put together regulations on cryptocurrency. It took them several years to come up with some regulations. The regulations they came up with are extensive. They're in excess of 200 pages of regulations. And the upshot, if we were to say what is involved with what they call the broker-dealer regulations, is an obligation is being placed on centralized exchanges like Coinbase, Uphold, Robinhood to issue a 1099 form at the beginning of a year to report the amount of financial activity the person had done and to send that to the IRS and to the taxpayer. This particular form is being called the 1099-DA for digital assets. I mean, we get 1099 forms all the time, particularly if you're a stock investor, you're familiar with a 1099-D, which basically lists everything you sold during the year. And most of the time, it's going to list what you bought it for. And therefore, this is your profit. And that's a wonderful form. If you're a stock investor, you just basically take the bottom line number off that and put it on your tax return, and your taxes are done. And crypto people would like to do that, but we just don't buy and sell on one exchange. We tend to buy here, move it over to a hard wallet, move it to another exchange. So it's very complicated. But what will happen with the 1099-DA is that, to the best of their ability, companies like Coinbase and Uphold exchanges will have to report what they think the cost basis is of what you sold. So that's going to go to the IRS, and what's going to happen is you're going to get this. This is happening now. They're monitoring your 2025 transactions. So come January of 2026, you will start getting these 1099 forms. And the more you trade, the more you buy and sell, the bigger those numbers become. And they can become quite scary. Because if you're the type of person that, like, let's say you had $10,000, you buy a coin, and then at the end of the week you sell that 10,000, you made $1 profit, you sell for 10,001, and then the next week you reinvest that 10,000. You would have had 52 weeks of investing $10,000. That would look like $520,000 of sales. And of course, you didn't make that much money because you're only making $1 every week. So it can be scary. Plus, you have to reconcile that against your gain calculation from all the other places that you're buying and selling crypto. So starting next year, gain calculation is going to become significantly more complex because now you're going to have to reconcile against these 1099 DAs. So that's the big issue. The second issue that these regulations brought forward is an obligation on the taxpayer to use a first in, first out, or FIFO method and you have to do it by wallet, okay, or by account, if you will. Up until now, the guidance that the IRS has put out has implied that you don't have to use FIFO, and that you can do what's called a universal wallet basis. So you kind of throw all your coins together and pick whichever ones you like. Now they're requiring it to be by wallet, not jumping around. So the problem here is twofold. One is that's not how people have been doing it, and to all of a sudden have to change and do it a new way, the numbers, we think you already sold a coin that the IRS thinks you haven't sold, and it's going to be difficult. So they created a transition plan, which a lot of our clients took advantage of. It's called a safe harbor plan. But the problem is they want to apply this method retroactively. They intimidated us in the write-ups. And I have to tell you, this is, you're hearing it here first. We are in a tax court case where the lawyers have pushed it to the IRS Independent Office of Appeals. Independent is a misnomer. And the IRS Appeals has actually pulled this law out, this regulation out, and said, we're going to apply this retroactively back to 2017. So we think that's kind of an outrageous thing to do, to retroactively apply something 8 years prior. The switch from universal to by wallet and switch to FIFO, in this person's case, is causing a $2 million swing in the gain calculation to the IRS's advantage, to be sure.
Wow.
So it's very, we think it's very interesting. Everybody needs to realize that everything has to be FIFO. Right now, of the 8 gain calculation services that are online, only 4 of them can support FIFO. Only 4 of them support by wallet gain reconciliation. So 4 of these people have to recode their systems. Most of the gain calculation services have done poorly financially, and because it's been a bear market for the last couple of years. Even last year, there wasn't a lot of trading because everybody was sitting around waiting for the peak to come, and it didn't happen in 2024. So, it's be very interesting to see who's around to do this. So that is a big issue. These are big changes that have happened.
Yes, definitely. Well, and another big change is President Trump talking about getting rid of taxes altogether. So do you think that will happen? And if so, what would that mean for crypto and for income taxes?
Well, the old saying goes, how do you know a politician's lying? It's because their lips are moving, right? So, I think no taxes. I don't think anyone seriously believes that, but maybe it's true. Maybe he wants to get to that point, but I think a lot of things have to go his way before we achieve that. I think he's already taking actions. I think to get past this year, some things like no tax on tips, no tax on overtime, and I think he wants to eliminate the taxation on Social Security income, which up until now has been taxed if you make other income in excess of a certain amount. The no tax on tips, the IRS had just come out with a gee golly whiz bang new system obliging everybody to report their tips. So they basically just said, forget that. So the very interesting stuff that's being done. He proposes replacing that income with income being made in from tariffs. I think that's a less predictable source of income because ultimately everybody aligns and the tariff income goes away. I think that's once the tariff war settled down, that income kind of disappears. I'm not sure how much we can trust it being there. It's difficult to totally eliminate. The U.S. government didn't always have income taxes, up until there was an amendment. We had some income tax during Civil War because Lincoln needed money, but it was a nominal tax on certain types of income. But then in 1916, they passed the Income Tax Act, and it was still a very small tax, like 3%. But now we're at much higher percentages. If he could eliminate income tax if he significantly eliminated massive fat in the federal government. So that's not just Doge, but then that's coming through with congressional action to slash budgets, slash spending commitments, so that money's not being wasted. So that's a tough act. The Democrats are going to be fighting against that tooth and nail. If the income from tariffs is significant enough, he could eliminate much of the income tax. I don't know about Social Security and Medicare. That is an income tax. That it's a big amount of money. It's about 1/3 of the income comes from those two taxes, and I don't think he's going to get rid of that. I don't think we're going to pay for that with tariffs, but it could go a long ways. I think politics has a way of clogging up the system. I think it would be exciting. I think it'd be a great time to live. I think if we completely eliminated income tax, I think it would have far greater impact in other countries. I mean, they're already talking about Canada. I mean, in Canada, I have a stepdaughter that lives in Canada. You know, they're paying 50% to 60% of their income in taxes, and they feel poor up there. And if all of a sudden they look down at the U.S. and there's zero tax, that puts a massive pressure on the Canadian government to realign what they're doing. Same thing on all other countries in Europe and around the world. They're all going to have to rethink how their taxation regime, especially if the Trump administration lowers the business income tax. Our business income tax is currently at 21%. Trump got it there in 2017, one of the lowest in the world. He's said he wants to get it down to 15%, if not lower than 15%. There was actually an agreement under the Biden administration with the OECD to have a minimum corporate income tax at 15%. And the Biden administration signed off on that. All other countries did, because the purpose of this tax is to make sure that countries don't prey on other countries. But I think Trump's intention is to say, forget that. We don't need that money. We're going to lower it. So I wouldn't be surprised if you have corporate tax down at the 12% rate, or even lower, maybe 10. And when that happens, businesses from all around the world are going to come to the U.S., which is no surprise. That's one of Trump's goals. So, and that would really stimulate the U.S. economy. So it's very interesting. It's very interesting times ahead. If this actually happens, we're into a total recovery and explosion in the U.S. economy.
I agree with that. And that's kind of what I'm seeing in my cycle work, is that we're going to have that starting maybe around the May time horizon into the second half of this year. So we'll see what the actual catalyst is that starts it. But something big is up, because I'm picking up a lot of good performance this year.
It's a dream. It's a dream. Could we do it? It'd be nice. I mean, because what we have looked, I mean, if we step back, I mean, for the last 90 years, well, over 100 years, every year the government wants more money. They want more money. They want more money. When does that end? I mean, you look over at Canada and they're pushing 60%, and when does that end? Politicians always want more, and it has to end at some point. Maybe Trump is the one to do it. Very exciting.
Yeah, and this Doge, concept is really exposing a lot of the fraud, theft, excesses, not knowing where the money went, the lack of transparency. We're learning so much about what's been going on with our taxes that, I think that whole piece of it is an important part of the next step of doing away with taxes, perhaps. What do you think?
Yes, evil flourishes in the darkness. And darkness is where the U.S. budget is and how the expenditures are being made. Darkness is where money laundering is happening. The lack of accountability, that the U.S. Defense Department hasn't passed an audit in 7 years. That there's no auditing at the hundreds of millions of dollars being thrown at Ukraine. There's no auditing as to where it went. Is it accountable? Is responsible? Have people done it? So I think transparency via, as Musk has proposed, the budget on blockchain is a powerful tool. I think voter fraud would be eliminated if we had blockchain-based voting. I think this would be an exciting form of revolution. I think if you go back in history, in 1844, 1845, there were revolutions all over Europe. Many of them were quickly conceded, where a monarchy would just tumble. And I think we're in a similar revolutionary time period now. I mean, we're seeing a shift from very aggressive statist governments like we see in Europe to a shift more towards populist governments. And of course, the pendulum always swings back and forth, but it's swinging radically right now, and people are being radicalized. And also, there's been things that are going on with population changes that are also going to make for turbulent times. It's a great time, I think, to be living in America. It's a great time to be investing in cryptocurrency because I think that gives us the best hope for surviving what turbulence is in our future.
Yeah, absolutely. And we have so much change coming with AI and robotics and crypto and just a whole bunch of amazing inventions that are going to change our world. But unfortunately, we're still being scammed by the low frequency people that are out there to take people's money. And we've talked about the love life, the romance scams, and you're telling me there's one called pig butchering, which I'd never heard of before. So tell us more about what's going on with the scams and how to catch.
These pig butchering scams are, most people don't discover that phrase until it happens to them. But it is an extremely sophisticated scam, and it preys on people's insecurity, and they get sucked in. And now, a romance scam works this way, where somebody, maybe they're married, maybe they're not married, but they're on the web and they start talking to somebody and they build a relationship. And it goes on over time. Maybe they're just chatting, or maybe they exchange a picture or two, and this relationship grows and it's cultivated. And the other side is like, oh, you're a wonderful person, and I need some help with my credit card bills, my mother, blah blah blah. And so there gets to be a movement of money from the one who's kind of emotionally tied into this stranger at the other end that they're chatting to, and they might think it's a some girl from the Philippines, and that they've shown pictures. Doesn't mean that's actually who they are. It could be a bunch of guys out there running a website, but they suck them into this story, and they start asking for money, small amounts, but then it grows more need. Sometimes it's for need. Sometimes it's, oh, I'm investing in this crypto investment, and it's making me really good returns. My only problem is I don't have enough money to invest. I need, it'd be really great if I had another $2,000 to invest. And then they start talking about how great the returns are, and this person, oh, that's great. And they start putting more and more in. It just snowballs. That's the romance scam. And another scam is where people think they're getting into crypto investing, and they go through some organization, and they like, wow, I'm getting 20% results, 20% growth every month. So they want to put more in and more in, and they see their account balances are just swelling. And they heard that, yeah, you got to move quickly because this opportunity is going to end within 9 months. You got to get in quickly. So people start emptying out their 401ks. They take loans. They borrow money on credit cards. They're borrowing money from their spouses, from their in-laws. I was talking to a guy today, borrowed money from his mother, cashed out his 401k, took a loan to invest, at this point, $140,000 into an investment. Now, these investments, sometimes you ask for money back, like a cash out. They'll send you some, but not all. And then when he finally realized that he ultimately lost a total of 110,000, but he thought the value of that investment was up into the hundreds of thousands, right? But it's just a lie. And what happened, what's really grievous about this is when the person realizes they've been scammed, they've realized they've wiped out everything. I mean, and then they got to admit to their spouse that they've lost everything. Especially if it's a romance scam, you got to admit to your spouse that you were even talking to this dalliance with someone in, somewhere, and you've given them hundreds of thousands of dollars, that there's no more retirement money. People are talking about getting divorced. I had two guys that were a husband and wife, both of which had PhDs, never invested in crypto, thought they found a great investment, amazing response, amazing returns, cashed out their 401ks, lost $250,000.
Oh,
What do you do? I mean, it's very sad. It's very sad. First of all, these people are full of shame. And then they caught to add to things, they tell the scammer, they say, well, I want to get my money back. And they say, well, we can't give it to you unless you pay taxes on it. And the tax is 20%. So, that's 250,000 you got in there. You'd have to pay us $50,000 and we can send you the rest of the money. We have to take the tax out. So the person still believes that they're going to get that 250,000. And so then they squeeze more money out to give them 50,000, and they're out that as well. So it's just incredible how it destroys people. I will say this, from a tax point of view, there is a little bit of a silver lining. You can get a claim and investment theft loss, which allows you to itemize the deduction of that amount of the cost basis of what you put in, not the false amount that they said it went to, but the dollar value of what you put into the investment. So that you, so I mean, in this particular guy's case, 110,000 that he lost, say at roughly 30% federal and state tax rate, he's looking at saving, maybe $33,000 that comes back to him. Well, that'll help him pay off his credit card bills that he ran up. So there is a way to do that. I will say that you're not going to hear about this from do-it-yourself tax software, and most tax preparers are unfamiliar with this process. So you'd want to call our office to discuss how to get that done.
Interesting. Well, that is so sad. And it happened actually to the lady that does my nails. She was on Facebook, actually posed as someone she used to know from her home country, and put her into an investment scam and started, the Ponzi scheme where they gave her great returns, they gave her money back, and then she reinvested that and more, and then lost all of it. And it's been so sad to hear just the whole thing, and it's just really affected her entire life and her family. Her finances are a disaster. I mean, the whole thing is just so tragic.
It can be really soul crushing.
Yeah, really awful. So I wish there was more legislation against these scams, or some way that we could, get rid of these scammers. It just seems to be so prolific, especially in the whole crypto space. Unfortunately, there's so many of these scams where they're pretending to be from Coinbase, for example, and contacting you, asking for passwords or seed words, which you never want to give to a stranger. I just got a message the other day about, oh, you were on a toll road and you owe a toll. And I thought, I don't think I was on a toll road on that drive. And I Googled it, and it said, yeah, that's one of the biggest scams out there, is the toll road scam. So thank goodness I didn't click on it or pay that. But I mean, there's all kinds of crazy scams, and it's coming right into our inbox, or it's online on social media. It's everywhere, and it's just gotten out of control.
We know what's really made it worse is it used to be you'd get these letters from, Pakistan, whatever, and there were
Right.
spelling errors and bad English and all that. You just knew it was a scam, right? But now with artificial intelligence, they can really craft a nice scam, and they can feed the artificial intelligence. They go on to like Facebook, or they go on to LinkedIn, and they can scrape information about you and then spit it back to you and say, yeah, I knew you back when you worked at this company, and we blah blah blah, and it gets believable, and like you said, I'm not sure where this goes. I mean, do we have to create classes in high school on how to not get scammed? I mean, the scammers are only going to get more and more sophisticated. And I've had scams where people have sent me DocuSign forms saying, we just need your signature so we can send you the refund. And I know, I don't know where that takes me, but I just know that's nothing good's going to come from that. So
Yeah, that's really awful. Well, so Clinton, with everyone having to keep track of all of their crypto trades, now most of us in my investing group, we're long-term holders. We don't do a lot of trading, but there's the occasional taking profits, or changing from this one to that one. But it seems like, because of the difference in wallets, it's gotten more complicated to try and trace it or track it, because it's not all occurring on one exchange or in one place. So
mhm.
how do people keep track of all of that, or what can you do to help them?
Well, you're right. If you're a buy and hold type of person, you're not going to generate many taxable events. Whenever you sell something for cash or exchange it for another cryptocurrency, that generates some sort of gain that you have to report. So as people get into more frequent trading or swapping, meme coins and all that stuff, they're spinning off all sorts of taxable events. And some people are, they use bot programs to do buying and selling, and this spins off all sorts of taxable events that you have to report. Uh, Typically, there are online services that you can, in a sense, do it yourself. The more exchanges and the more DeFi wallets you have, the the complexity of doing your gain calculation grows somewhat geometrically at that point. So it's very difficult. Uh, I would say this to anyone who is now our company does full service gain calculation. So you're going to pay us a certain amount of money, but what people find out is that they actually are it pays for themselves because they're going to come up with a lower capital gain amount. Uh, and here's my rule of thumb for someone: if you're using one of those services, and just because you did the trading doesn't mean you know how to do the accounting reconciliation on it, first of all, right? So if you're doing one of those services and it comes up and it says your total gain was this amount, and if in your gut you feel like no way that I ever have that amount of money, then don't accept that number. Just simply don't accept it. Because in my experience, almost everybody has a pretty good sense of how much they made. Now, people say, "Oh, I don't know. I have no idea." I say, "Well, did you make $1 million?" No, 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 I didn't make $1 million. Did you lose $1 million? No, I didn't lose $1 million. And I narrow them down until they get to the point where they're admitting they made 200 to 300,000. I say, okay, you think you made somewhere between 200 and 300,000. So if a number comes in, say at 250,000, more or less, you should feel comfortable with that number. And I have also worked with people where because maybe they had a lot of losses and they don't have the money to do a gain calculation, just go with your estimate. And here's why. If you think in this particular case, that you made 250,000 in trading, can't exactly prove it, but you know yourself where you're at. You know that that's how much money you had left, sort of thing. Report to 250,000 as capital gain. You'll pay taxes on the 250,000. If you get audited and we do the gain calculation, we should come up with a number that's in that range because you have a good sense of where it's at. And therefore, if you're audited, you're not going to pay much in a penalty. You might get a refund. I had a client who, and these are big numbers, who was using, in this case, one of the gain calculation services. In his case, it was TurboTax. And TurboTax said he owed 120 million in profit. Now, he was a big trader. He did about 5 million trades, all DeFi, threw around a lot of money. I asked him, how much do you think you made? And he goes, I don't know. It was somewhere between 40 and $80 million. Of course, I know these are millions. That's funny, but just accept it. I said, well, if we split the difference and called it 60 million and reported 60 million on your tax return, would you feel comfortable with that? He goes, yeah, I would. And we pay tax on the 60 million. Yes, I would. Now, he was coming to me like in August, all right? So it was really kind of late to file a tax return. So we went with the $60 million. He paid taxes on it. When we finally completed a detailed gain calculation, how much did he owe? How much gain did he make? 61 million. So even someone who's doing 5 million trades, swinging big numbers, has a good gut feeling of where he's at. And so we just amended the return and added, that extra capital gain and pay taxes on it. So by all means, you should trust your own gut feeling and don't believe these numbers that come off these systems if they're nowhere near the ballpark. There's no reason why you should pay more. Some people out there saying, well, I'll just pay more so that they don't audit me. There's better ways to tackle that, like having our tax shield service, monitor it that way. And if you're a big trader, if you're somebody with $2 million, you should probably have us 2 million, let's say you're doing $2 million of trading, not holding, then you should be having us do your gain calculation. It will pay for itself, frankly, because we fix price our gain calculation for people. We fix price how much it costs. So that's my advice on that.
Well, that's fantastic. If someone wanted to contact you, Clinton, how would they do that?
To contact us, best place to start is to have a consultation with me. Go to cryptotaxaudit.com, go to the contact page, schedule a consultation with me. We can talk about your situation and how a lot of people have not been in compliance in past years and they want to get in compliance. Whatever your situation is, we can talk about it. I can answer all your questions. We seriously are the leader in crypto tax. No, we understand the full dimension of crypto tax like no one else in the industry, and we can help you. And then from there, we'll give you an estimate. If you want us to do just the gain calculation, we do that on a fixed price basis. I mean, I'll just tell you right now, our average price for a gain calculation for a large somebody who does maybe 5,000 trades a year, maybe a little bit more, you're in the 3,000 to 6,000 range. We'll fix price it for you. And then we do a tax return, as I just described earlier, a type of tax return you wish you had if you knew you were going to get audited. And we'll fix price the whole thing. You pay some up front, some at the end when it's all done. We have extremely happy clients, and most all our clients come back. Uh, our big clients come back year after year. They're very happy. So,
That's fantastic.
right. So yeah, go to cryptotaxaudit.com. Follow me on Twitter at Crypto Tax Fixer. Go there, like, subscribe, follow, all that. And we have a YouTube page. We have a lot of viewers there too. So I'm very happy to help. There's no reason why you should lose sleep at night worrying about problems, worrying about letters from the IRS. Talk to experts. You will feel very good. You'll sleep a lot better at night.
I can tell, and I can tell that you don't judge people, that you're just there to help people. And I think that's amazing and awesome. And no matter what problems they've had in the past, you're there to help them and fix them. And that's a great resource that they have.
We're committed to everybody's success.
Great. Well, thank you so much for being here today.
Thank you so much for the time. Appreciate it very much, Linda. Have a great day.
My pleasure.
Very good.